Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. Now, Vishnu, it's always great to have you on the Monday.
Always a pleasure, Brian.
Now, before we get your insights, let's take a look at how markets in the region are actually performing. We've got the Nikkei is at 27,608. It's down 1.41%. Shanghai Composite is at 3,528.16. It's down 0.31%. The Hang Seng is down 1.59% at 27,558.42. The ASX 200 is at 7,227.70. It's down 0.82%. The Kospi is down 0.94% at 3,246. Vishnu, it's a sea of red across the region. Why is that so?
Well, it appears that risk has been coming off and risk aversion has been building up on a multitude of reasons. One is, I think markets have overlooked the slightly stronger US retail sales numbers and are fretting about confidence that appears to be dipping. But the bigger issue is this Delta outbreak that has then started to feed on itself. We've not only seen an outbreak of cases in Asia, led by Indonesia, of course, but you also see cases starting to rebound very strongly in the UK, with the UK just heading into Freedom Day, where all the restrictions are going to be lifted today. I think that's causing a lot of consternation about this Delta, variant starting to break out in UK and wider Europe, and even in US, where vaccination rates were well ahead before. But the reluctance for the remaining population to take vaccinations and cases starting to rise again is bringing home the point that we're not done with COVID risks in the rear view mirror just yet, and there's still work to be done.
I think, the bigger risk now closer to home for us is actually the region, because we've got COVID rearing, taking a terrible toll in Indonesia and Malaysia, and in Indonesia particularly among healthcare professionals. So this scenario is probably going to get worse before it gets any better.
Yeah, I mean, absolutely. There are 2 points of contention here. One is, of course, the outbreak and the ability to control it, and whether the healthcare capacity and capabilities can handle it without it becoming an even bigger healthcare crisis is one question. The other, as you rightly pointed out, is in Indonesia, we've had medical professionals also succumbing to the outbreak. And this really brings home the question about how efficacious vaccinations are. So depending on which vaccines are being administered, the ability to contain it seems to differ. So now it's not just about getting vaccine rates up. It may also be a question about which vaccines we've got access to and what kind of concoction is being used. For example, Thailand may be resorting to mixing of vaccines as a booster effect, as Indonesia may also follow. So that means that the vaccination timeline and play also becomes quite different. And I think all of these are adding to the uncertainty.
Now, Tokyo Olympics as well. I mean, that also has a dampener because of some cases that have actually flared up.
Yeah, and this is in the heart of the Olympics village. We've got not only some staffers there who have been tested positive, but athletes have also been associated with very close contact. So that really casts a shadow on the ability to go ahead with the Tokyo Olympics. But you've got officials and the administration pressing on with it end of the week. So that's necessarily and quite understandably causing a lot of trepidation about what will then happen in terms of the potential COVID outbreak and what it means for the population and the economy at large. So all these things are hanging over markets, which understandably are not in the best of moods, which is why despite US Treasury yields going lower, which is usually associated with EMs doing better with lower yields, we have the exact opposite, because this time around, it was the risk off that was driving USDs lower as the safe haven demand came back in.
Now, Vishnu, from the negativity to something a little bit more positive, OPEC Plus, and it reached a deal on Sunday to phase out 5.8 million barrels per day of oil production cuts by September 2022. So basically, given the fact that an increase in production has been telegraphed for the next year, which probably is good news for world markets in terms of oil prices, what's your view on oil prices for the rest of the year?
Well, I think to some extent this means that extreme swings in oil prices can be avoided. So let me explain. Even though we saw oil prices slipping back a little bit because they have agreed to start scaling up output at 400,000 barrels per by 400,000 barrels per month. So every month they're going to increase it. The bigger reality is oil prices should have plunged even more if they can't agree on restoring output, because eventually the end game for that is everyone not adhering.
That's right, and it's a free for all.
Yeah, free for all pump fest. So that kind of extremity is avoided, and at the same time, the fact that Saudi has acknowledged that the demand recovery is probably going to continue playing out, and that's why they're committing to that 400,000 through September to restore fully. If they see that coming, there's some optimism around that, which means demand can pick up. But they've also tempered it. They said, look, we will look at how the demand evolves. So they're saying they are mindful of the downside risks. So they're just not going to open up the floodgates. And they're also referring to the fact that demand recovery may not be that smooth. And they're also watching whether Iran brings back supply back to the market. So there are a lot of conditionality around it, which with all of this conditionality in balance, it'll probably confine oil prices in a fairly familiar range. We're talking about just sub 70 to up to $85 perhaps, because after that, let's bear in mind the US shale could also factor in, dampening prices from above. So there is a dampener in place to avoid excessive buildup. The only reason for greater volatility is not because supply cannot catch up, it's because global inventories have been drawn down. So the sensitivity around any news that supply may be constrained can cause prices to pick up quite sharply, but we don't expect this to be a durable effect.
So in other words, Vishnu, what you're saying is, and if I can read between the lines, there is a ceiling, but from a floor perspective, there's a ceiling as to how much it's going to go up. But from a floor perspective, well, it could go down depending on demand situations and supply situations also in terms of coming into the market.
Well, let me put it this way. As long as I've got wood furniture around me, I'm touching it, because where the floor might give way is if the Delta variant and further variants really get the worst case iteration, and we see demand falling, plunging, going into a free fall. That's one situation. Most other situations, I think the OPEC Plus will try to contain, but of course the other situation that we just mentioned earlier is when they all suddenly can't agree under pressures from wanting revenues. That can also give rise to a sharp drop, even though in this case, because there is a limit to how much output can be created in a short term, that plunge will not be as sharp as, say, the worst case COVID variant risk outcome. So that's really where we stand on this.
Now, we've got earnings season in the US that's in full swing right now. But besides that, and what other key events and data points are you looking forward to this week that will move markets?
I think for us, we are looking at a few things. One is like as you rightly pointed out, the earnings will have very specific impact on security, so on and so forth. We're just looking at first the big risk backdrop. So as much as we hate to go back to watching headlines on daily cases, now it starts to matter again, particularly for the UK, for ASEAN as a whole, even for the US. That's one. From a currency perspective, we think the ECB will be quite important, because exactly how their new strategy is laid out and how it will be executed, if we get details of that at the ECB meeting, that could have potential to move the euro in a big way, which is the biggest anti-dollar. And so that could frame big dollar movements and so big dollar swings, despite the risk environment that we're talking about, where dollar should be strong. Last but not least, we're watching the interest rate space to see how much worries about inflation tend to build up despite the risk off, because this could mean how risk assets behave despite fairly low yields, because we're watching for yields to pick up again once risk aversion fades. And that's something we don't want to lose sight of, that there could be higher interest rates in the offing, in the wings, even as we get used to USD yields pulling back now.
Now, we've got a PBoC meeting as well this week. Anything to watch out for? Expectations of no change, or is there expectations of tweaking of rates?
There are two iterations I can do here. I can either say expectations of no change or no expectations of change, whichever way I put it. I think the PBoC, their biggest moves come typically by surprise. and not in telegraphed meetings. And a lot of the policy communication requires reading between the lines. And we think a lot of the thought process around it probably got aired after the Q2 GDP last week. That was, preceded very closely by the 50 basis point RRR cuts. So basically, they're trying to spur the economy, but they're not going to do anything to headline rate cuts because they still need to contain financial risks and property market risks. So nothing in the headline tools, very calibrated fine tuning, and that's probably not something that they are going to harp on during the PBoC meeting.
Vishnu, thank you very much for coming on the show.
My pleasure, Brian. Thank you for
Now,
having me.
we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages. Please like and subscribe to them. And check out our website, www.biztech.asia. Thanks for tuning in.